My name is Scott Jagger, and I'm the retail analyst here at Leisure Trends Group. And I want to thank you for attending today's winter wrap-up and spring preview of the outdoor industry and the retail sales thereof. I'm going to dive right in. So, first things first. This is a webinar, and we are in an environment where you can hear me, thank goodness, and I can't hear you, but I do want to hear your questions. Don't bother raising your hands, I won't see them. But you can use the dialog box or command box from the WebEx GoToMeeting box there, and you can ask as many questions as you may have, and at the end we're going to play Stump to Chump. So, again, ask as many questions, think of them, have them queued up at the end, and we'll answer as many as possible. Also, get our legal notice out of the way. This webinar is for you and your company, and it cannot be used in any other way without the express written consent. See, right there, express written consent of the Leisure Trends Group. We also must approve any press releases, advertisements, etc. That have LTG's name. Who are we? Well, we are a Boulder, Colorado-based consumer research tracking and consulting company, and we specialize in all aspects of how Americans play. And when we say play, it crosses the gamut. We are tracking outdoor, we are tracking snow sport, running, cycling, consumer, over 80 leisure activities in our consumer research. It's an amazing company, and we're very proud of what we do. That bald guy right there is me, and I am the Senior Manager of Retail Analytics. So I oversee the analytic team here at Leisure Trends Group. I've been with the company now 14 years, and before that I have been in the outdoor industry and also market research for at least an additional 6. So 20 years of combined experience. In this industry. It's something I love. I love working with my coworkers. I love working with the people in the industry, and I love working with the clients. So what do? Leisure Trends has 3 major divisions, and we answer the what's, the whens, the whys, and the hows. And how, as in to increase sales and grow and retain your customers. Our retail tracking division captures point-of-sale data from a panel of stores to identify trends for categories, for brands, and all the way down to the model level. It allows you to see retail margins, sell-through, inventory turns, and essentially gives you a complete look-down perspective on the industries that we serve. Our consumer research department is truly full of geniuses and PhDs, and they answer all the whys by going straight to the people who get the answers. We have a complete global capabilities and have run many global market studies. But we also do brand equity. How are you doing out there? How do people perceive your brands? Consumer profiling, segmentation, advertising testing. And when you're spending dollars on advertising, you need to know if they work or don't work. It's getting so crazy out there with all the different media that you can go to and spend your advertising dollars on. Shopper insights, price elasticity studies. I can't even emphasize how important that is, especially these days with retail prices going through the roof. We're looking at 10% increases this year easily. And it's important to know how high you can go, where those margins are going to float for your retailers, for yourself as a manufacturer. It's huge. And of course, we have retailer perception. You know, that's so important to the selling. It's not just the consumers, it's the retailers, the ones making the buys, the decisions, putting you on the shelves and racks. And we want to talk about product development and research. It's a no-brainer. You bring a new product to market, you have to know what it's going to do and how people are going to receive it. And we have consumer relationship marketing, our CRM team, and we've got cutting-edge technology, in-house experts that are actively able to expand your customer database, engage your customers, drive them into the stores, create relationships. And that's going to build loyalty, and that leads to repeat business. and huge fans of your brand, of your store, of your resort. Cannot emphasize how important this is in the day and age of this omni-channel sales we keep talking about. People are going to websites, they're going to brick and mortars, they are going to review sites, they are talking to their friends. You have to maintain contact, you have to maintain that loyalty, and you have to build a fan club to keep customers walking through your doors. And our job, the analytics team, all 5 of us, we take millions and millions of rows of data that we receive every single month from thousands of different retailers, process that, turn it into easy-to-read information. That information then becomes knowledge of your industry, of your channel, of your brand, of your competitor. And the next step, and this is where we want to help, is you take it to wisdom, which is applied knowledge. We want to make this information we give you and this knowledge we give you actionable. We want you to be able to go out and make decisions and take action and make money with the information you receive from us. Just a few of our outdoor clients and a few more, and by no means all of them, but this is how many logos I could get on 2 pages. Today's agenda, we're going to be talking about weather. This is winter sales. We're going to be focusing on October through March of this year compared to last year, compared to previous years. This winter was crazy. I mean, it was in like a lamb, out like a lion when it came to retail sales. In like a lamb with a hurricane thrown in, which did nothing to help sales, but so maybe lamb is wrong. And it out like a lion, sales did increase 13% in Q4, the January to March period. But that lion didn't have a lot of teeth, and he wasn't able to gnash through enough inventory to get this inventory issue we have now corrected. It helped. It ticked up sell-through, but not great. So we're going to look at sportswear and outerwear. Did have strong sales. Equipment, footwear, both declined. We are going to get right into those retail tracking data and see what happened. Sales reached over those 6 months, $3.7 billion, and is the strongest Q4 to Q1 winter season on record. But again, that's dollar sales, a lot of it driven by ARP, retail prices increasing, units through 3%. Deep dive into outerwear, sportswear, winter equipment, and we're going to look at the inventory levels. They're better than last year, but that's not saying much because last year was miserable. We're going to look forward to spring and the summer selling season. What consumer trends are going to drive these sales? I'm going to look at sportswear. Yoga. Yoga is massive. It is. You have to pay attention. You have to adapt. You have to understand that this category, this movement, is stealing sales from the outdoor industry. We're going to look at footwear and also equipment. Talk about shoulder seasons. You've got to stop looking at our industry as spring, fall. It's not binary. People shop all year long. If you just swap out your products for one season to the next, you're missing sales. Selling the spring products longer into the fall, or transitioning from shorts and sleeveless into long sleeves and pants, and having a longer assortment of sporting, sportswear and key camping equipment categories in the fall, and vice versa in the spring, bringing things in sooner, having a lot of that product there. You're going to, don't let people think it's going to be clearance time. Wow, summer. No, we can stretch this product and keep sales and turns going longer and more thoroughly throughout the year. And especially when our winters are getting shorter and shorter, it seems you need to have less winter product and more summer product on the shelves deeper into the fall. And we want to talk about leveling the playing field a little bit. How specialty stores can overcome the showrooming trend. And the showrooming is destroying the big box stores. Case in point, Best Buy, etc. But specialty stores are actually uniquely positioned to handle, address, compete, and win this. Internet's not going to go away. It's never going to go away. and it's growing. And there's amazing, awesome online retailers in our industry doing good things and turning a lot of product. And it's a good thing, but specialty has to be able to adapt, and it's going to be, their own online presence. It's going to be less product, better, tighter inventory and allocation, more service. Manufacturers have to step up and force map. Retailers have the ability to look at exclusive new brands that you're not going to see in other stores within the chains, local brands, etc. So there's a lot of things that we can do, and adapt to essentially retail reality going forward. So remember the good news, back in October, consumer confidence was up. Situation jumps 8 points. We had the highest holiday expectations since 2007, before the recession. Everybody was in a good mood. Hurricane Sandy hit. Weather stayed warm. It never turned cold. Winter didn't come, and it crushed sales. Crushed is relative. Total sales still in Q4 were up 5% for the outdoor industry. Saying a lot when you're looking at this great swath of our contiguous United States above normal temperatures. Here's our soggy brothers and sisters in New England, and the poor kids down in Texas, and New Mexico and Oklahoma, sweltering through a drought. It was a tough Q4 weather-wise. Helped a lot of other industries where it's easier to get to stores, yada yada. Outdoor industry thrives on bad weather, as I like to call it, good, fun weather. And that weather did start coming. It started to snow finally in the last weeks of December. It continued to snow in spurts all the way through March. And when you look at Q1 sales in 2013, other side of the holidays, they actually jumped 13%. Pretty solid growth. And again, 13% in the 3 months of Q1 versus the power quarter of Q4. Not enough. It translates to a winter where sales totaled $3.7 billion and increased 8%. And I have solid sales. I should put quotes around that because units only climbed 3%. So that's good and cannot complain. But again, it did not chew through that inventory. We entered at the end of October with some of the most massive inventories that were left over from a pack and hold mentality the year before, plus new products brought in, than we've ever seen. And inventory does decline from last March, but not enough. We're going to get into that. What's interesting is total ASRP across all product categories grew 5%. It's reality. I mean, we knew years ago costs were going up. Plants are moving inland in China. Plants are moving. There's unions. There's rising gas prices, like the cost of a container. Everything is going up. And for a couple of years, the manufacturers ate those costs and those expenses and did not pass that along to the retailers, which translates directly to the consumer. That had to stop. And those prices came up. And those prices came up at retail as well. Units grew 3%. Would they have grown more if there wasn't price inflation? Not sure. But the fact that the prices are up reflects reality, and we're going to have to deal with that going forward. All right. This described many people's opinion of the retail landscape in 2012. Hottest year on record. Disgustingly hot for a lot of people. Crushed sales for some categories, boosted sales for others. What's beautiful about the outdoor industry is that we can adapt. We can take the cold weather product off, bring it in the sportswear, bring in the other things. Of course, you're going to be handicapped if you don't have the cash flow and you don't have the ability to make quick buys. And if they don't make quick buys and people don't make strong buys, manufacturers don't make enough products, and it's going to be a self-fulfilling circle. We want to get that corrected and get back on track. But it was a hot year outdoor industry still finished up 5% total in 2012. Flash forward to yesterday. This was the view out my office window. And if you've got friends on Facebook from around the country, you've heard the wailing and the moaning from Minnesota and the Midwest and Chicago about a protracted, long, extended winter. It's been miserable. And, oh, I don't say miserable, I kind of like it, but retailers have been hating it. Outdoor retailers have been loving it if they have the product to sell. Hopefully, past March into April, these cold temps help sell down a lot of the inventory that we're stuck with. But what is this long, colder spring, late to the game, do for all the industries that we track? Well, outdoor finished up 13%. Independent bike dealers, the IBD, they crashed 13. They were down 23% in March alone. But take that with a grain of salt. Last year was exceptionally good. It was hot and dry in the spring. And so this 13% drop really reflects more of a return to the baseline of what sales look like in Q1. Paddle sports are down, it's cold, damp, no one's going. Sporting goods, which had double-digit growth for most of the past 12 months, came to a screeching almost halt. And run specialty, which has been strong all the way through the recession, all the way up, actually had 5% decline from last year's big hit. Those last 3 months of January, February, and March salvaged the snow sports season. Things were grim. We were looking at full-blown train wreck derailment of this industry all the way right up through the holidays, and inventory nightmare. Double-digit growth in January, February, and March brought it back, and then it ended up giving it a 3% growth over the year before. Still have inventory problems, especially for key categories, but it grew over last year and was actually only 2% smaller than the record season 2 seasons ago. Let's look at some of the trends here, and this is, beautiful, lots of double-digit growth. Outerwear, even though it's slow in that Q4 in the first 3 months of winter, they finished strong, and over the full winter, outerwear finished up 10%. Insulated jackets. These guys have been the sweethearts of the outerwear category now, and this is probably going on their 3rd year, up 11% after phenomenal growth. They have been putting dings into fleece jackets and shell jackets. Fleece has adapted, but let me talk about insulated fast. This type of jacket, like my little, my anonymous little black tag there. Anyone who doesn't know what jacket that is needs to go back to school. This has revolutionized the insulated category. And I'm calling out this particular jacket, but it shares similarities now with many, many, many jackets by many, many, many brands. They're not, if you're worth your salt, you have created a thin, lightweight, insulated, either down or synthetic jacket. Thinner baffles, less puff. They're going to be usually a higher loft, or at least a good loft jacket, so it provides warmth, but they are skinny. Days of the Michelin Man are going away. Winters are warmer. You don't need to walk around with 4 pounds of down or insulation. These work well. Hoodies, not hoodies. This has type of insulated jacket is the way of the future. It is revolutionizing what's going on. And say, Company P may have truly started this with like actual huge sales. They weren't the first ones. There were other thin, light jackets out there. These took off. Now everybody has them. It's revolutionizing things. If you have technologies inserted, they're able to bring it down lighter. You're using the Pertex, the lighter weight shells, etc. This is what people want, and this is where they're gravitating. What they've done is crush fleece jacket sales, and the fleece went up 7%. What's happened is it's these types of fleece, the super soft, plush, lightweight fleece. It's the Monkeys, it's the Ositos, etc. And it's this fleece that is selling well and that is growing. Traditional 200, 300 weight type fleece is taking hits, and they've taken hits over the last 3 years. And the reason is this type of jacket. Thinner, more crushable, more packable. It fits into backpacks. It is light. It is slippery. It goes underneath the shell. It doesn't snag. And technically, it could possibly be warmer while being less bulky. People have transitioned. If they're doing a shell insulating layer combo, they're going away from a lot of the fleece, and they're going to these types of insulated jackets. Oops. Shell jackets are feeling the pain. Shell jackets have, for a while, even in the wintertime, had sort of a race to the bottom when it comes to actual price points. The advent of the $100 price point, great for packable raincoats and everything, but people now, they're not going for shells. They can get an insulated jacket that's going to be windproof. It's going to work. They've been declining for several seasons now. They grew a little bit this year, 3%. Again, that's going to be coming from the higher price points more than unit sales. Good year for accessories, handwear, headwear. Unfortunately, the inventories are still really high. You've got base layer up 9. Winter equipment just could not dig itself out of the trough that was started in the first 3 months. It was down 19% in Q4, up 18% in Q1, total aggregate down 1. Winter boots, things are shifting. The brand that has been growing and growing and growing and growing for years finally looks to have plateaued, and there seems to be a little bit of fatigue by both the consumer and the retailers. So this category is correcting a little bit. Shearling declined this winter. Traditional pack boots, like the real traditional pack boots, like most of Minnesota wears for 9 months out of the year, but also like the newer ones with the women's boots with the fur trim, all that, they continue to grow. And also children's boots, men's and women's, across the board. Not that slippery for so many months, so just the traction category also declined. So winter boots is shifting brand-wise, and you want to pay attention to that with your sell-in and what you choose to purchase. All right, let's talk about down. Down and long gone is the traditional huge fluffy down jacket. Too warm. Those might be overkill. Certainly is used for some of those types of jackets, and they will continue to sell, and they're going to be there, but it's going to give way to those lightweight jackets and or a lightweight synthetic jacket, so Streamaloft or something similar to that. I'm looking forward to see some of the new technologies and insulating technologies coming out of Polartec or the WaterTech down. A lot of neat things coming up next season that'll help continue to drive innovation and sales. But looking at down and not down, which is synthetic, sales are almost identical, 203 million each. Well, 204 if you round up for down, almost identical. Up 13% in dollars, 9% for the synthetics. Look at units. Identical growth, practically. 9% growth, just under 9. Both grew on the back of a lightweight trend. Of course, the systems are out there, but if you start looking at which systems are selling, even those have gotten lighter. So the 3-in-1s, they've gotten lighter. A lot of them now have synthetic. They have down. The down systems, a small segment, are actually up triple digits. And average retail, this is telling. Down grew 4%. They're about $35 more expensive than the synthetic counterparts. The retail price went down for synthetics, or at least stayed the same. You know the cost went up. So there's a little bit of a price pressure there. Also, the bigger, heavier duty jackets, not necessarily selling, but the lighter weight ones are. So a little bit less price premium there. All right. I don't know how else to say this, people. The inventory of specialty is too damn high. It's a mess. It's disruptive. There's a pig in the python, and we have issues. There are more dollars still invested in outerwear at the end of this March than ever before. up just 3%, but it's up after last year's miserable sell-through. So $134 million that are now trapped in inventory that was not moving by the end of March. That means there are no open-to-buys, there is no cash flow, and that should have been released from this product category. Sell-through ticked up, but it's still well below the 10-year average. Outerwear, carryover sales. Carryover is product sold at or below cost, up 269% in March. Retailers panicked. Again, this is specialty retail. And like retailers panicked, they have to unload this. They're getting rid of as much as they can. I don't think it's enough, and I'll touch on that in a second. Outerwear retail margins, because of this product, this much product on the shelves and this much pressure to unload it, stood at 42% for the margin. It's the lowest in 9 winters, and that's lower than the winter of 08-09, which was the depth of the recession, the nadir. Retailers are still doing this back and hold mentality. They have not truly tried to lower prices and get this product out of the shelf. And you know, you look at March retail margin. It's at 33.8 for outerwear. Still 2 points higher than March 2009. Back then, they unloaded it early. They got rid of it. They got their OTBs back. You know, this is sort of analogous. Retailers are investors. They're investing in these low-yield municipal bonds right now. Like, they're making 0% or very little product, you know, percent growth on these things, like gains. Just sell it. Take the penalty and reinvest it and get higher returns. It's going to disrupt supply. It's going to disrupt reorders. It's going to slow down factories. It's going to ruin the ability to do just-in-times. You know, take snowboarding. You know, an entire factory has closed down because there's not enough turns. There's too much product. It's stalled out. They built up debt. And now there's 5 or 6 brands out there building product in Dubai and Slovenia and Bulgaria and everywhere else. This is a reality, and if they keep pumping more product into this channel and into the other channels, it's not going to go away. You're going to see price pressures. You're going to see more product in auction sites and one deal at a time sites. It's going to have to be stripped clean before things really return to normal. All right, I feel better now. This is units, and they do tick down. Inventory units at the end of March. The yellow line is your sell-through. So units do tick down, but still the second highest in 10 winters. These are dollars. Costs are up. Inventory dollars are up. More dollars trapped in inventory. And sell-through ticked up to 74%. But you put that bench line in, sorry, that is not good. That is the second lowest we have seen in 10 Marches. There is too much product out there. Here's winter equipment. Winter equipment sales, static. You know, negative 1%. This is units, I think maybe 2% decline. But look at this long-term trend. That's not good. Specialty retailers, they're abandoning, moving away from winter equipment categories. They're going to leave it to the ski shops. They're going to leave it to the online retailers. It's lower margin. It's a gamble, and you're seeing this. Now, those are unit sales. And I just said they're abandoning this category, but they're not doing a very good job of it. Because here's unit sales. Blue line all the way down, all those bars, nice slope. This is inventory dollars at the end of March. It's not declining. Every time they buy less at the beginning of the season, they're stuck with more product at the end. Again, inventory dollars came down, so it's slightly lower buy this year, but again, look how high it is, you know, higher than the previous 4 years. Sell-through, higher every single year but one in the past 9 seasons. All right. There are some categories that are growing in the winter equipment category. So no side country for old men or anybody for that matter. Don't call it side country. Safe this side, not safe over here. Walking through a gate does not change anything. It's just as bad. But the pithy, roll right off the lips, lift service backcountry category is growing. And I do like that term because it still is backcountry. It still expresses the dangers. You know, the tragedy here just a couple of weeks ago in Colorado hammer that home. Some of the best backcountry pros taken out by an avalanche. Do stress that with your product and, you know, on the retail floor. That said, people are buying it, and it's been growing steadily for years. Lift service backcountry, I think, is more appropriate for what's going out the door. We're seeing the boots and the bindings grow. The skis are declining. So the traditional, super lightweight randonnée, climbing skis, they're not moving through the system. But the boots and the bindings, which you can just strap onto a pair of Gatamas or Sevens or whatever, that is moving out and doing very, very well. And the corresponding ski shops are also having a very good job selling these. Fastest growing alpine boot category is actually a hybrid, the Alpine AT boot. Looks like an alpine boot, behaves like an alpine boot, but it's got a releasable spine that lets you walk. More people are buying those probably to get down Bridge Street and Vail into the parking lot and then to actually do backcountry. But that option is there. They want it, and they're using it. Here's winter boots. Again, like I said, just real briefly, sold out. Sales have declined 2 years in a row now. Big precipitous drop last year. Here is end March inventory for specialty stores. Big drop. Unit sales, flattish, right? Down a tiny bit. Look how much fewer inventory units. People backed away from key styles out there. And helped correct, not enough. But then again, he said, like other brands, other styles of boots are selling well or sold well this winter. Still going to be stuck with some inventory, but they are strong and they're doing well. Sell through, there you go. And I want to say, like, if you're not selling that product through, it's sitting there. It's getting dumped. It's being low margin. It's going to go onto the ODAT sites. It's going somewhere. And it's not good. So there. Sportswear investment. This is a good sign. Right there. Now, little tick. This is a percentage of inventory dollars at end March, so heading into April. They tick this up. But look, the old days at specialty stores, the good old days, 4 years ago, this stuff popped. And the sooner you start selling sportswear, the sooner people will start buying it. Especially this winter might be tough. That's because it has dragged on so long, but it's there. People are going to look for it. And you'll see when we go into the dynamic reports, it's selling and it's up. Inventory dollars are up for outerwear too. This is that carried over product. Accessories, base layer. This is a good sign. Base layer is coming down at the end of March. Better, more significant buys. There's less in stock at the end of the season when they don't need it. They can transition to the sportswear, or they can transition to like basic underwear instead of like, base layer insulating qualities. So less base layer at the end of March is a good thing. Now if you can bring this down and bring accessories and sportswear up, it would be in a much healthier place. And I'm saying sportswear is up, but it's up because of retail prices for the most part. We have 8% growth across all stores. Specialty, kind of anemic, not great. Internet, doing well, and chain up 13%. But let's look at units. Total units, all stores, down 2%. We've got sportswear bottoms and chain, pants, growing in March, not offsetting unit declines. Everything is down in specialty, internet, mixed bag. Retail prices are up 10 to 11% across the board. Costs are up. Is this pushing units down, or is weather pushing units down? I say it's still the weather. We are looking at a transition period, and it's, the short sleeves, which were strong last year, are not going to be strong this year. The sleeveless, the tanks, the shorts, not strong out of the gate, but people are buying the long sleeves and the pants. Let's see if my cube is still updated here and didn't time out on me. Let's click something fast. Yay, it works. So now we have to log in so soon that we might time out. Here is the full season. Dollar sales. All sportswear sales for the full winter season grew 11%. That's huge. Units or dollars. It's 11%. And this is a Q1 compared to a really nice hot one last year. That is good growth. Again, it's more retail price, but it's still dollars moving through the till. And the fact is, retailers hung on and they sold. And this is where I want to talk about shoulder seasons. It's not binary anymore. Just don't dump product and move new product in. Sell this for as long as you can. If the season's shorter and winter is starting later, you need to have a product assortment that's going to appeal to your consumer. This goes for both manufacturers and retailers. Retailers can make smarter buys and bring this in, but manufacturers and vendors, you need to have the product available too. If you don't have enough long sleeve shirts, sweaters, hoodies, etc., you really are going to be missing the boat on products that will sell both spring and fall, adapting to either season. Too many times you walk into a store, everything's summer's been pushed onto a rounder, and it's 70 degrees out, and I have to go buy a down coat or a fleece. No, I would like to find a shirt in the middle or pants that are in the middle. And smart manufacturers and smart retailers are extending into these shoulder seasons and treating them almost as a unique buy and a unique way of displaying merchandise. I'm going to filter now on March. We're going to just walk through this real fast. All stores, sportswear tops, sportswear bottoms. Short sleeve shirts down 13%, $2 million. If we, shorts, what are they down? Shorts are down 5. Skirts and skirts are down 8. Sweatpants, tiny category, down 42. If we transition over to units by changing our filter, we've got a big story here. 420 to 330, 90,000 fewer units sold across the 3 channels in just March alone for short sleeve shirts. That is weather. And there's not a whole lot you can do about it except sell the heck out of your long sleeve shirts, sell the heck out of your pants, get those up, and sell what you do have. And if you have product that you've brought in for such contingencies, you're going to do well. Pay special attention to jackets and vests, up 54%. These are sportswear jackets and vests. There's really a nice urban tinge going on with a lot of the product out there. New styling, appealing to the urban woodsman, etc. It's again, we're going to have some weather issues. Specialty stores, let me get on this little rant, they're down 5%. Specialty stores wait too long. If you look at the transition of where the money comes from in chain stores, it already happens in March. It goes to sportswear, and outerwear declines into second place. Sportswear comes up. Specialty stores wait till April to really make that transition and get that sportswear in. The deliveries, is it just mentality, trying to stretch that winter product as far and as long as you can? Why not sell full margined sportswear instead of half margined and half price or marginless outerwear? Move it. Transition faster. Get that shoulder product in sooner, or at least do a half and half type thing in your stores. And manufacturers and salespeople can help with that. Clue them into what your best sellers are, etc. And it's going to make a huge, huge difference. I'm going to go quickly over to footwear. I'm going to go into all products here and drag this out. Couldn't be more simple. Nice March bump for hiking boots. Slushy, gross out, perfect product. Also, we've seen Urban Woodsman. This is a trend. How many people have you walked on? I mean, how many people right now listening to me have a beard? It's fascinating. You walk down Pearl Street, go to Portland or whatever. Like you think we're the vanguard, but we're almost behind the times compared to New York, Chicago, Minneapolis, and a lot of the other major markets. It's there. I would merchandise towards it. I would encourage it. I would tweak my brand selection to hit the ones that are hot with this subcategory. Casual boots, same thing, up 51%. Shoes, down 10. Water shoes, tiny categories, just not warm enough yet. I'm not worried about that. Last year was killer. It was hot. The paddle sport sales are up and everything. Multi-sport shoes are taking a hit. Same with sandals. Sandals, it's weather. They're not going to grow until it gets warm. Multi-sport shoes, it's minimalism. And minimalism is becoming tiny. All stores, March sales, down 66% in unit sales for minimalist multi-sport shoes. You know the brand. It was awesome. It made mint for many, many, many retailers out there. They turned their inventory tens of times. It's kind of done. You know, 69% in chain, 63% specialty, so it's across the board. It's slid down the back side of that product adoption curve like a playground. It's, you know, we've been talking about this for a while, but there's always hope because there's minimalism in trail running shoes, right? Well, if you look at our canaries in a coal mine, which are the specialty stores who go out on a limb, take that product risk, trail running shoes, March, minimalist only, down 27%. So instead of growing, it's down. Granted, it's slushy growth out still in March. It might not be a trend as much as weather related, but I would pay very, very close attention to that. And minimalist only, all stores, only up 1%. So you still have growth in your chain stores, up 18% and 11%. But there's your specialty stores. These are the guys who jumped on this first, capitalized on it, got that trend, you know, gave that trend traction, and allowed the other channels to pick it up. So pay attention to that. Wait for warm weather for your sandals. Maybe wait for warm weather to see if this is, again, weather-related or not. But I would be very cautious. Back to our slides. What else is driving things this spring? A lot of the same things that we talked about in our trend presentation at OR Winter are still resonating. Close to home. The close to home mentality has been around since the recession. People are staying tight. They're still car camping. They like car camping, and they continue to buy the products. They like the backyard barbecues. They like these pop-up tents. Mid-sized packs, those day things, up 10%. Synthetic fill rectangular bags, up 35%. Recreation tents, 72% growth. And this is just March. These are good things. This is like a really strong sales out of the box and in bad weather. Experience gather. It's still the same thing. People want experiences. They don't want things. And yes, they like things, but they talk about the experience because it sounds better on all their social media. And since the recession, they are trying to get rid of things, but they do want to get out. They want to enjoy themselves. Climbing gear and bad weather, still up 2% in March. Binoculars, all those hikers, all those birders, all those people buying those hiking boots, they're getting out. Buying binoculars, wrist instruments, all the heart rate monitors and GPS stuff is killing it at retail. And one of the reasons is people want to show off. They're not going to brag, but they can definitely pop that up onto YouTube with their GoPros and their webcams, and they can definitely upload their crushing a century on their bike with their Strava or their GPS. It's still going like nuts. Action cameras are up 85% this March. Solar chargers, so they can stay connected. Even though people want to disconnect, quote unquote, they're bringing solar chargers out, and it's up 130%. And some other things. It's just the style, lifestyle is driving tons of sportswear sales. Trails to cocktails, we talked about this before. Dresses are still growing. Not quite as fast deltas, but they're growing. Skirts, people are running in skirts, and it's après. It's the lifestyle product. If you look at the assortment out there, it's not all about pure function and performance. It's a lot of style going into these things. Yoga. Yoga's a mess. Not in a good way for the outdoor industry necessarily, but it's a hot mess for a lot of other companies. And I'll pop into that real fast. Sportswear, again, urban tinge, casual shoes. Didn't talk about that in the shoe section. I should have. A couple of major brands are actually slowing down. Some of those cash cows are slowing down in casual shoes. The category itself is strong. And back to this urban woodsman, driving a lot of sales. Yoga. See all those people? They're in Times Square at the solstice doing yoga. They bought all their products probably at Lululemon, at Lucy, at Athleta, probably at the Prana stores, and in one of the few yoga brands that have made it crossover into the outdoor industry very well is Prana. They're all out there buying this product, millions and millions of people, and they're supporting Lululemon, who barely takes a stock blip when they sell see-through pants and issue a recall, and they're already back to normal levels. It's a huge, huge industry, and you need to pivot. You need to create the product, and you need to carry the product that these women who will do it on the yoga mat, but also take it out on the trail, take it out on walks, take it anywhere they go. I mean, yoga pants are now just sweatpants. And all these women could be drawn into your retail store, and your retail store could be buying your manufacturer's product if you go and transition to some yoga-centric product. Showrooming. All right, this is the last little bit. 46%. You know what that means? That is a percentage of people surveyed who had done research on a product before completing a purchase online. And this I picked up out of Newsweek. This is general population, mass media talking about this. We've known this is going on. We know that online retailers are a presence, and they are a growing presence. And I'm not knocking online retailers. I think there are amazing online retailers out there doing an incredible job for the outdoor industry, selling a lot of products that can't make it through because of limited distribution. A lot of it is sold above MAP at MSRP or very close to it. A lot of them are chain stores with online presence, and a lot of it now is specialty stores with online presence. And that is the reality. It's omni-channel. You walk into a small shop, you can go to the kiosk and see what's online. You can stay at home and still buy from the shop across town. You don't have to drive there. It's changing. This line tells it all. Chain share of total dollar sales over the past winter, almost steady as heck. Specialty has given up 12 points. Internet took it. Full year. Chain stores now outsell the 2,000-some doors of outdoor specialty. So this is full year sales. That just tells you how strong chain is in sportswear and summertime products. Everybody's growing. These are aggregate sales, not shared. But if you look at the compound annual growth rate, specialty stores have only grown at an annual rate of 3% since 2005. Chains, through growth, new stores, aggressive marketing, beautiful business practices, all sorts of different reasons, they've grown 7%. Online retailers, 13, almost double the growth rate of the other channels, or of the chain channel. Yes, it's a smaller base, but it just shows you the momentum and where this retail industry is going. 2 more slides. I can get out of here in 5 minutes and get you out of here in 5 minutes. These are the trends that we're looking at coming, going forward. Stores are going to get smaller, especially some of the ones that are really large format. They have to give up that real estate. They have to give up a lot of operating expenses to compete with online retailers who have warehouses and have none of the other issues going on. Omni-channel. specialty stores with online presence, chain stores with online presence, online stores that now have, storefronts. It's all over the map. Your customer is looking at all of them. It's like the holistic consumer strategy. They're going online and they're going to find product and they're going to make a decision. Do I buy it online? Do I buy it at my local specialty store? Do I buy it at my chain store? Well, let's look at price. Let's look at experience, etc. And this is where future retail, if you're going to be smart, you have to personalize service. You have to build rapport. You have to truly make something stick in the mind of your consumer that they like you and they feel important. Experiential, how many stores offer clinics? How many stores have climbing walls in them? How many stores? I mean, add these things. Add clinics. Add, tune shops. Add memorabilia on the walls. Anything to make it fit a person's lifestyle and their perception. I mean, stores that run clinics, or not clinics, but like, hiking trips on the weekends and things, they build massive, loyal customer bases. So make it experiential. You can't replicate that online. Three-way communication. The old method, retailer talks to consumer, manufacturer sold in, kind of done. Manufacturers are now talking to their end users. They're building up their customer relation databases. They are customer marketing. They're targeting consumers. They're helping drive them into their retailers. Retailers are talking to their customers more than ever before. They're doing targeted messaging. You send emails out to the people who bought boats. You send them out to the climbing community. You send them out to the hikers or the thru hikers. The communication now is so amazingly more powerful and absolutely necessary than ever before. But you have to realize everyone's got to talk to each other, and it has to happen. Otherwise, you are going to lose customers as they go chase price. Transparency. You're all naked when it comes to a consumer. They walk in, they float, they hit their iPhone, Droid, whatever. They red zone, red laser. They use the Amazon app. They know exactly if your prices are above or below somebody else. The only thing you can do is, as a manufacturer, enforce MAP. Don't undercut your other vendors. You have to not do that. You're going to lose sales as a manufacturer because those online, like those buyers in those specialty stores, or online if they're getting undercut, are looking at the exact same information. And if there are competitors out there dumping product or selling super low and they can't compete, they're not going to pick you up. And consumer data mining, all back to that communication. The more you know about your customer, the more you can target your customer. And this is why there's huge opportunities for specialty retailers. You have to adapt, and you have to change. And I know specialty retailers don't like that sometimes, but the ones that do are going to really, really succeed. You already have a small format. You're local. Everything these days is all about being local, like farmers market, farm to table, whole thing. It comes into like supporting your local community. You can edit your assortment. You can pick up brands that may not be in the Salt Lake box. You can reach outside, find running brands, bike brands, just sportswear brands, etc. You have that ability to duck and weave and compete on that sense. You've got the community relationships. You can build those trusted relationships back to, creating that experience, creating awesome customer service, honoring returns, etc. Full path. Take them through the process. What do they need? What do you have? How can you provide that with them? How can it make their experience better outside? Get them to buy those boots, plus the bottle of waterproofing, plus a pair of socks. You can do this with the right add-on and the right expertise, which takes you to personalized service, which takes you to delivering the right experience, which feeds into the whole lifestyle while people still need that community. They need to walk into a shop, feel like they belong to something. And again, communication. Build that list. Work that customer relationship marketing. Target that message. And you're going to succeed. Online's going to grow, but you can grow and you can space your own the whole way through. Manufacturers need help. The vendors need help. But, biggest thing, MAP. minimum advertised pricing, but there's all sorts of different ways with that communication. There's communication with their CRM databases to help drive sales, et cetera, et cetera. So, big picture, dollar sales grew 8%, units only 3. That's what happened in the trenches. ASRP drove much of that growth, especially in sportswear. Inventory, too damn high. Sorry, said it. We need to clean it out. We need to take aggressive action and clean these pipes back up. Otherwise, we're not going to get orders back on a predictable track, and it's going to be disruptive. Margins are going to stay weak until we have an inventory correction. And that's it. Until you really get it, you transition the product out. And other big question is, how high can we raise prices? I mean, we know costs are going up. When will the consumer push back? And shoulder seasons. Offer more product longer into the season. Offer more product. Don't treat it as a binary selling period. Have product stretch longer into the fall, especially if there's no winter, and have enough in the spring. Soften and round out some of those buys. I think sportswear will do well this summer, especially if it warms up. It's going to be still more of a price thing than a total unit sale, but inventories look good. I'm still bullish on sportswear. Footwear is going to be more of a challenge. We really don't have any blockbuster brands out there right now. I mean, some are still driving turns. A lot of brands are driving turns. There are none of those guys that actually drive people into the stores. And, focus on the trends. When you think about retailing or marketing or point of purchase or any sort of merchandising, talk about the experience, not just the bells and whistles. How can you make people's time outside more fun, more comfortable, more memorable, more awesome, so they can stick that stuff up on YouTube? And that is it. I did it in 1 hour and 2 minutes. Excuse me, in 58 minutes, so under an hour. I win. You win. But now we have questions and answers. Well, first thing, too, all this information, retailers, if you are a member, you get this. It is free of charge. It is included with that, tiny obligation of sending data once a month that is completely 100% secure, that we signed on disclosures. It could not be more simple. If you need brand and model data as a vendor or manufacturer, please contact Julie today or Liz Tahura. And if you're interested in a little CRM, targeted messaging, definitely contact our salesperson, Ben Lockett. And that is what I have. I just want to thank everybody for all your time and patience. And let me see if I can pop these questions out. I want to drag. See this. Oh yeah, we got a lot of questions. So if you guys want to stick around, listen to the question and answer session, we will definitely do that. You can definitely stay, or we've got a recorded session that you can hit later also. So first comment, audio is muffled. Thank goodness we fixed that. Will you send us a presentation after? Yes, we can send you the full-on presentation, and if you want a deck of the slides, we can do that for you as well. What we'll probably do is break some of that animation apart so that all the slides work for you. All right, so most of my questions are comments about how you couldn't hear me, and how you can hear me. We did switch from the speaker mic combo to the phone. So what categories are represented in this data? I saw map pricing models in the omni-channel slides beginning. Is that a successful thing for a brand to implement, or has it? Let me see if I can bring this up. There we go. Now I can stretch this box. I'm sorry, guys. I saw map pricing models and omni-channel slides beginning. Is that a successful thing for a brand to implement, or has it just driven pricing down to the map price across the board? No, I think it is successful. I think it's important. It levels the playing field, which is like one of the headlines I had in my beginning thing. it forces a fair competition, and what it does is it stops a race to the bottom. You look at, you know, the issue of like Best Buy. Best Buy now has opened it up where they will match pricing with Amazon. Amazon has so much lower costs. So there's Best Buy saying, sure, we'll sell you the exact same television set for this below MAP, if they even have MAP, but like really low cost. They're making no money. They can't even like sustain operating expenses. You don't see that in higher end products like Viking stoves or, you know, even a Mercedes or something. The price is the price. There's not enough of the product out there, and all the retailers who do sell these higher end products keep that price the same. So when you go online, you go to a chain store, you go to a brand store, it's all the same. You're going to buy it where it's most convenient, where you're going to do. So I think in that sense, it's great. MAP has to have a release valve, though. If product is not selling, it just does not turn. The retailers do have to have the ability, once, you know, in a release or type situation, to get rid of that product. Because if you're trapped as a retailer, you're not going to want to go back to the manufacturer either if you can't move it. So enforcing it all the way through until the shoulder seasons when it's time to get rid of the product, I think is really, really key. Outerwear versus insulated soft shell. Okay, so question was like outerwear versus insulated soft shell, etc. Sorry, outerwear is the parent company that includes insulated tops, shell tops, soft shell tops, and hard and fleece tops. So outerwear was just that parent category, which is up 10% as a whole. Yeah, see, someone has a beard. They told me. Could you please go through casual shoes and possibly discuss what brands that you're seeing slowing down? Well, I don't really want to talk brands today. If you are a client, I will talk brands till the cows come home. But today I want to keep it more at the category level. But think about the blockbusters in casual shoes, and the blockbusters are slowing down. Some of those just stalwart, venerable, awesome brands out there, and some of the ones that had been declining are all actually growing. And when we did have that blockbuster brand going berserk, the casual shoe category was beautiful. Was it was a rising tide for a lot of those vendor ships. So a lot of brands have come up in the past year. What do you see as the future trend of made in the USA? Man, that's tough. You know, you watch these factories collapse and kill 400 people in Bangladesh. You see rising costs. It's leveling the playing field on the cost side. If you have to transport from interior factories and then getting them onto expensive transports, it's made in the USA in that sense. Could bringing it home closer to the source, sourcing the product and everything in a pure cost-benefit analysis does make sense in some cases. I think the American consumer, unfortunately, is awfully capricious, awfully, they kind of talk out one side of their mouth and purchase with their other. It's, we've done a lot of studies on green products. Everyone loves the concept of green products. They're not going to spend more than 10% more to get it. And I don't know if the whole Buy in the USA label is going to drive a lot of the sales and make people make one purchase decision over another. But would I love to see it? Absolutely. I think it should be encouraged. Bring the jobs back. But I'm not 100% sure it's going to really budge sales as much as possibly increasing profit. Is it possible to get a copy? Yes, we will get you a copy of the presentation deck. Again, I don't want to talk about brands, but like which brand seems to be gaining market share against some of the more hegemonic brands and some of the bigger ones. Well, you'd be surprised that as some of like the bigger brands, sell out or adapt and they create new products, other ones have really shot up. And it's been fascinating to watch. It's a bit of a paradigm shift. Again, for a large brand to lose 2 points a small brand can, double their sales practically if they were able to capture that. So there's a lot of things going on underneath some of the bigger ones, and it's really fascinating to watch. But then again, some of those guys, the big ones, the top 5, they adapt quickly too. So the old days when you thought of the battleships, not really. They really do have the ability to do it. How will you send the presentation? Everyone is going to get a link to the recording, and everyone individually can get a presentation. So if you put a request in or you send me an email, we can do that. How do you see compression fitting into outdoor retail? Compression is a neat category. We have run specialty. We've got cycling. We've got our sporting goods channel. And compression is generally in all of them. It really is sort of like the new science. It's what people are looking for to add to the performance. And with so many more people going out and training and racing and doing all these fun runs and triathlons and warrior dashes and things, every little bit of advantage helps. And, with recovery and things, outdoor, I can see compression hanging next to the trail runners, absolutely. Compression / protection by having a tougher sock. Outdoor industry people are getting a little bit closer to try. They're bringing in some other, depending on the retailer and things, bringing in some of the more traditional running shoes for trail running and running. I think your best bet with compression is find those crossover stores that sell both running. Either have a running boutique within the outdoor side or vice versa. And I definitely focus on both the trail running aspect of it, which continues to grow, and the triathlon and some of those different types of runs. What trends are rising in handwear? Well, the fastest growing category, and it's not really a category in our data, it's like segmented, but you can see it by the individual models, styles being sold, are the smartphone compatible gloves. They are growing ballistically, and all the different brands that do sell them have done very well with them. It was a weird winter, so it's hard to know. I mean, stuff all the way through the holidays, there were sales, but they were static or stagnant to a degree, and then things popped. If you'd like to discuss this further, we could deep dive and find those brands and find the styles that are actually growing, find the price points of what's going on in that category. And another person's asking for the deck. You guys, I'm going to go through every one of these questions. They get archived, and we are going to absolutely make sure every one of you gets a cleaned up deck. Like I said, we'll take the animation out so you see every slide and every table. Don't stop there. I mean, once you get the deck, once you get the recording, let's talk. I can help explain things. I had an hour. We can really deep dive into the categories you want and explain things, where the data comes from, how we get it. You know me, I can rant on about categories forever. So I really appreciate your time today. I really appreciate working with such a great group of people and such an important industry. The stronger we are as a whole, the more ombudsmen we create for the great outdoors, the more open space we protect, the more wilderness we protect. Everything is good, and I just want to see this industry grow more and more. So that said, I want to thank you all very much, and you have a tremendous week. It's Thursday, so I'm going to tell you to have a great weekend. And again, thank you very much. Talk to you later.